Hello everyone, I'm sure that you're all good. So today we're going to be discussing how to create your own trading plan. We're going to keep it very simple because, well, we like to keep it simple and we are not big fans of complicated stuff. We want our trading plan to be something that's easy to follow, something that's manageable, and something that's fun to follow. There are a lot of benefits of having your own trading plan, so we won't get into that, but at least for a month, just try to follow your trading plan. And if it's not working, then you can see what's not working and we can tweak it at the end of the month. But for this month, you just have to try and follow your own trading plan. So the first thing in your trading plan is you want to set your goals. So when I say you want to set your goals, are you looking to get 1 or 2 trades in a day, or are you looking to get 5 trades? What are you looking for? What do you want in the markets? What do you think would be best for you? So let's say the first thing is set your goals, right? How many trades do you want? I personally look at 1 or 2 trades, right? So every time I enter, I always have a trade that I leave my stop loss on break even and let it run, because my first trade I'm looking for 10 pips, and then my second trade 20 pips maybe. Sometimes I like to get my 20 pips. Let's say if I open 3 trades, right? If I open 3 trades, I'm going to let the first 2 trades hit on 10 pips, and then the last trade I will set my stop loss on break even, and then I just let it run. If the trade reverses and it's eaten stop loss on break even, I'm not losing anything. I've already acquired my goal. And oh yeah, you just want to set your goals, what you want, what you're looking for in the markets, how many trades you're looking to catch in a day. So those are our goals. I would say the next thing is choose your session. Um, Definitely choose your session, because the thing with trading is there are times when it's best to trade and there are times when it's not best to trade. There are times that gives you high volume and there are times that do not give you high volume. So I would say opening of London session, right? And if it's a good day in the market, and if I'm saying, let's just say pre-London to opening of London, yeah, pre-London to opening of London, yeah. And then if it's a good day and the markets are printing very well, there's somewhat good volume in the markets, I very much like to trade New York stock market opening. So when I say New York stock market opening, it's because we have the New York market opening at 2, right? That's my time. I'm not sure about other people, but after an hour, 30 minutes of New York opening, the New York stock market opens, and this is when we get the true move of New York session, because the first move could be a good move, but it might just be getting us to a certain direction, so that when more volume comes in with the New York stock market, the markets changes direction or reverses or continues with whatever it's doing, depending on how the markets are doing. You just do what they are doing. So it's not every day. It's only when I have been waiting for a trade. So if I had a setup that I know it's not going to fulfill during London opening, I know it's going to fulfill during New York stock market opening. This you normally find it on gold. Gold can move somewhat well during opening of London session or during London session, but yeah. That's what happens with gold. It can move somewhat good during London session, but after somewhat a good move, right, it will start ranging, or it will push, not even with much volume, but it will slowly push into a certain direction, waiting for New York stock market to open. So it moves somewhat well during New York opening, but I would say the best moves on gold come during New York stock market opening. But this is all from the time that I have spent on the markets. Maybe things look differently to you guys, but yeah, that's what I've observed. So that would be the second thing that I would make sure of on my trading. Because when you choose your trading session, right, it's because it's more like this. I think I have explained it before. During market opening and session opening and then set and the session closing, right, that's when we have high volumes. So you want to be in if you're going to trade the opening, you want to be an hour or 30 minutes before the pre-market, so that you set up your strategy and everything. Like you look everything, that you read your trading plan, you go over your setups, you look for what you're looking for, you look for what you're expecting, so that you can do what the market is telling you to do. So the opening and the closing, they're always the best times to trade. But New York closing is not the best time to trade. I would say the opening of New York and the opening of New York stock market. Closing of Asian session, yeah, that's also good. That means closing of Asian session to pre New York, and then you just get into opening of New York. So I would also be careful of the times that I place my trades, because when London session opens, right, an hour or 2 hours after the market slows down, I wouldn't be opening trades after that. Even if I see a very nice opportunity and there's very good volume in the market, right, then maybe I would consider, but with a lesser risks than I normally open my trades with. But after 2 hours, let's say after when London session opens, right, the first closing of the 4 hour candle, after that I stop. I won't place any trades until New York opens or New York stock market opens. So yeah, that's just my 2 cents on that. So the next thing I would say, what's very important, is be aware of news. So let's just say news. I would also highlight this on my trading plan. News. Know what news is coming. If is it high, is it medium? Just know. I'm pretty sure from the time that you have spent on the markets, you know which certain news moves the markets. So you need to understand, in case that day there's some news that's coming to happen, you can use our news strategy on it, because it's a very good strategy and it always works. So yeah, just be aware of your news. When you sit on the market the first day, right, I would say always read your plan the first thing in the morning or whatever time you would start trading. And after reading your plan, it will tell you to check the news. So when you check the news, you know what time you shouldn't be on the market, or you should be watching, or if you have a trade, you're just monitoring your trade. But you should be aware, just in case you don't get caught up in the wrong moves. So yeah, the second thing would be news. The next thing would be, let's say, the conditions. So when I say the conditions, is what are you looking for to enter a trade? What's your setup? What do you need to see in the markets for you to say, okay, now I can enter a trade, or now I can look out for a setup. So I would say the next thing is conditions, or yeah, let's just say conditions. Yeah, let's just say conditions. So that would come up to be your strategy. Yes, conditions or strategy. Yes. So when I say conditions or strategy, right, so we're talking about my strategy is I'm looking for structure. I'm looking for market structure, right? I'm looking for structure. And when I say structure, I mean I'm talking about is the market ranging, or did the market break out, or did the market give me a fake out? Things like that. Let's just say I can elaborate and say things like market rangings, yeah, breakout or fake out. Is it trending? Yeah, so I want to see if the market is ranging, if the market is trending, if the market gave us a fake out, or if the market broke out. Broke, yeah. That's pretty good. So it's something similar to this. I could give you an example. So let's say I'm coming on the markets right now, right? This is us trying to trade, and we've looked at the news. We're coming at the right time, highlighted on our trading plan. So now we're looking at the things that we're looking for. Is it ranging? Is it trending? Did it give us a breakout? All of that stuff. So if I was to come on the markets right now, right, I would look at this, right, and I see market has been trending. So I'm going to tell myself market has been trending. What has it done? It broke support right here, right, and then it also hit somewhat of a minor support right here. So I know with my strategy, I need market to retrace this move for me to be able to give me to enter a sell. So I want price to retest this area first before I enter any sells. So I want price to give me some sort of a retracement or a range right here before it can push lower. So that's me using my strategy to determine when I get to take a trade. So there isn't much complicated to it. I'm just looking for structure in the market, and I'm looking for the breakout. If it broke out, I'm looking to see, did it retest? If it hasn't retested yet, then I'm waiting for the retest, and then I'll enter there. So when I say I'm waiting for the retest, I'm waiting for price to come back up. If I see a good opportunity on this low, right, if the low is saying price is high chances of pushing price back up, right? If it gives me somewhat of a good structure at this bottom, right, let's say a range or a W formation, or let's say a triple bottom, something like that, that pushes price higher, I could enter looking for my 10 to 20 pips first, and then my last trade with break even, aiming for the retest. So when it retests, that's the initial plan, right? That's the goal trade. I'm now looking for bearish structure to push price lower, and then I can catch the big move. So yeah, that's another thing that I would look out for. Oh shit, sorry. There we go. That's another thing that I would look out for. So let's continue with our plan. Um, the next thing I would highlight on my trading is the time frame you are trading. You need to highlight this on your trading plan, the time frame that you are trading. So we have people who like to call them swing traders. Let me tell you this: swing trading, you have to trade. You'll be holding a trade for 4 hours or more, going higher. I wouldn't call someone who's trading 1 hour a swing trader. You're just a day trader. You can call it an intraday trader. It's still a day trader. You're just a trader. You're just trading daily. But yeah, I would say choose your time frame. Choose your time frame. So I like to trade on the 1 hour and 30 minutes. The reason why I like to trade on the 1 hour and 30 minutes, it's because it gives me the ability to enter the market and will have my trade hit my TP normally, or stop loss sometimes, in maximum 2 hours, but mostly it even happens in like 30 minutes or even 15 minutes, sometimes even 5 minutes, because I try to enter when I see volume in the markets. But yeah, I don't like to hold a trade, especially a trade that I have entered on the 30-minute time frame, for more than 2 hours. I start feeling unease about my trade, and I do not like to feel unease. I need my trade to I need to enter and have my trade fulfill what I'm seeing within 2 hours. If it passes 2 hours, then I'm managing my trade to see if it's protected, or lowering my risk. So it's either I'm lowering my stop loss, or I'm taking out some position. So if I had entered at let's say a 0.10 lot, I would be reducing it to 0.05, just to be sure, or just to be careful, because there will always be more opportunities in the markets that we can grab more pips. But yes, or I'll be looking to see, I'll be looking at my setup to see what did I do wrong. Is the market trying to go in the other direction, so that I can adjust to the market and start looking for newer setups than having to argue with the market. I would call it arguing with the markets and telling it what you want it to do and not doing what it's doing, because we have to do what the market is doing. So I'd say choose your time frame, and then the next thing would be risk management. Yes. So risk management is very very important. So when I say risk management, right, I would say know your account size, right? Know your account size, and then determine your lot size. I always advise to use the same lot size on all trades until you reach a point when you say, okay, I have mastered this lot size, let me increase to the next lot size. Always use the same lot size, because when you use the same lot size, right, you start seeing some things about yourself. Am I waiting for my trade to hit take profit? Do I get unease when my trade is 5 pips in profit and I want to close my trade? Or if my trade is in a loss, do I start feeling like closing the trade or adding more position, things like that? So it's better to use the same lot size, because you also understand how that lot size works. You will know if it's 10 pips in profit, it will look like this, it will be this amount. You will know those kind of things. So you need to understand a lot size before you move on to the next lot size. You can't use a 10 lot size today, and then tomorrow you're using a 5 lot size, and then the next day it's a 20 lot size. You're not really um you're not really setting a good future for yourself, because remember, we get better each year. If you allow yourself to get better each year, you can destroy yourself easily. So risk management, know your account size, lot size, fix your lot size, then highlight or write down what you need to see to determine that your trade setup was wrong. Know when you're wrong. Like, let's just say know when you're wrong, or what actually know what you need to see. What you need to see to say your trade is wrong. You see, yeah, to determine if your trade is wrong. To determine if your trade is wrong. Yes, that is very correct. If your trade is wrong, because you might be a good trader, you might be the best trader, but at some point there are days when we are wrong about our setups. So just know that, okay, if I'm saying this is what I'm expecting, right? But if I start seeing markets saying it's doing this, or it went back into the structure that you're watching out for, or it's starting to show you more volume in the direction that you were not expecting, then you know you were wrong. So what do? Either you lower your risk, that means you close some positions, or you lower your stop loss, you move down your stop loss, or you just get out of the trade. You just close your trade. You can just close your trade. Yeah. So know what you're looking to find. Yes. Oh, before we go any further, okay, I'll address that later. So yeah, that will be on risk management, right? The stop losses and stuff like that. So the next thing I would look at in my trading plan would be entries. Yes, entries are very important. Know what you need in the market for you to enter. For example, if I am trading gold and gold has been ranging and then it breaks out, Gold always retests. Gold does not go anywhere without retest. So I always look to see if it retested. If I manage to catch the breakout, that's fine. But let's say I wasn't on the markets when markets broke out, or even I was on the market when it broke out, but I didn't catch the break, right? What I want is to see price retesting, then I can enter as it pushes further in that direction that it's going. So that's something that I have always tried looking out for, the retest. Let's just say retests. Yeah, the retest, and then I'm also looking for a breakout. If market, actually I'm looking for a range. That's the most important thing that I'm looking for is a range. Then I'm looking for a breakout. So you can, if you are going to write these things down, you can write range, breakout, and then retest. Those are the things that I'm looking for me to enter. And then after retest, I'm looking at my candlesticks. I need to see the candlesticks that I like for me to enter. There are certain candlesticks for certain, if you are like me and you've been trading the same pairs, you start noticing certain candles that always repeats and that always fulfill. So I would say these things are very important for me. The candlestick, the candles, their volume will be the one to confirm everything for me, because when a trend begins, you can see right here, when a trend begins, right, the first candles are always strong, showing volume, right? But when the trend is about to end, I can use this as an example. Right, when a trend begins, right, there's always volume, high volume, as you can see, right? But when a trend is about to end, it starts lowering its volume, and then a reversal with more volume came, and then we had a range. So if we were in the market, we would say, okay, price gave us an uptrend, right? Created a range. Okay, so from this range, I'm expecting a breakout. Since price is already pushing higher, it shows as an uptrend here, and then range, I'm expecting it to give me a bullish breakout. So I have my first confirmation, the candlestick. See, this is a pin bar. It closed bearish, so I would wait for the next candle to print, and then that's when the next candle printed the bullish candle right there. Right there, I would say that's an engulfing candle. Also, that's a nice engulfing candle because it's covering all of these candles. So yeah, this would be, if I don't catch this, then I would watch out for this retest, and then I can enter as it breaks here for the full move. But this would have been our first take profit right here. And then that trade that's on a stop loss is the one that will collect the full move. But yes, that's that. And then the next thing is, well, I'm not gonna say target. We can say target, but we have already talked about targets on our goals. So the next thing would be target. So we said we look for 10 pips first, right? And then one trade on break even. On break even. Break even for the full move. But we did discuss this on the goals. So yeah. And then the next thing I'll talk about on my trading plan is the pairs that I'm trading. This is very important. This is the most important thing, and people underestimate its importance. Pairs are very important because that's what makes you money. So you need to know which pairs you are trading. You can't just go on the market with 20 pairs and start going through all pairs to see what setup is going to happen, because you're going to miss most of the good trades whilst looking at the wrong pair. So it's better to look even at one pair. If you can't look at one pair, then you have 3 pairs, because you can manage 3 pairs easier than 20 pairs. So you won't be able to miss, well, you might miss, but normally you won't miss most of the good setups, because you're watching a very few range of pairs, so you don't have to go through so much just to see where your pair is at. So I would say have just a few pairs. I have GBP USD and gold. I also like to trade GBP yen here and there, but I actually do like trading pound yen. But yes, these are my pairs. I might look at euro USD or euro yen at some point, but I'm actually trying to cut out that habit. These are the pairs that I have mastered. These are the pairs that I do not, sometimes I don't even have to analyze everything. When I see something, I just know because I have been watching them for so long. So when you get to master your pay, you can take advantage of it every single time. And that's what makes you money. Knowing 20 pairs does not make you money because no one cares. No one is going to give you an award for knowing 20 pairs. I would say maybe if you have mastered that 1 or 2 pairs, then you can add another pair. After mastering those 3 pairs, then you can add another pair. But don't try to master 20 pairs. That won't work in your favor. But yeah, this is everything that I have on my trading plan. Very simple, very easy to remember, very easy to follow. These are the things that I use every single day, and I'm trying to even master it even more and tweak things that I think I need to fix. All of that. I don't think I need to fix any of these because this is perfect, but we will see as time goes on in the future. But yes, this is what I think is the most important things on your trading plan. So if you have anything else that you would like to add, you can do so. But yes, this is what I think is very important on your trading plan. So maybe you can start with setting your goals. Then you can start with picking your session. Then you can choose pairs. Then you can say checking your news. Then you can say your conditions or your strategy. Then you can no checking your news, right? Then time frame, then conditions and strategy, then risk management, then entries, and then targets. Yes, but yes, this is what I think defines a good trading plan for me. I hope you guys see this information as valuable. If you have any questions, please feel free to ask me. Yeah, have a good day or a good night.